The overall economic climate in the UK looks little change to the MPC thus far. In particular, we have long forecast a rotation in demand towards net trade and business investment and away from household consumption. This is what has happened, and we expect it to continue. UK exporters remain in a sweet spot, with sterling down 15% in anticipation of a Brexit that has not yet happened, particularly with a new transition agreement that extends unfettered access to EU markets until the end of 2020. Although they've eased slightly, the European and global economies are growing faster than trend and are projected to remain robust over the forecast period. As a consequence, net trade is projected to continue supporting UK growth over the next few years. Turning to business investment, evidence of both the bank's decision-maker panel of 3,700 firms and our direct contacts across the country indicate that the drag from Brexit uncertainty, while persisting, has not intensified. With continued support from strong external demand, limited spare capacity, the relatively high rates of return on capital, and the low cost of finance, business investment is expected to continue to expand at a moderate annual rate of around 4% over the forecast period. On the consumer side, although there's been some reduction in the household savings rate since the referendum, this has been far from a debt-fueled consumption boom. Rather, household spending has broadly tracked income and employment growth. There is somewhat greater uncertainty about the near-term momentum in consumption spending, given the recent weakness in consumer credit and the housing market, with the possibility that households could opt to save rather than spend as their real incomes recover. On balance, though, with the real income squeeze coming to an end and the adverse weather behind us, consumption growth is projected to recover over the forecast to rates broadly in line with the subdued pace of real income growth. Let's put that in some context. The MPC is expecting household consumption to grow over the next few years at about only half the rates prior to the referendum and merely 1/3 of the rates prior to the global financial crisis. So overall, the climate is one of modest demand growth with a combination of solid growth in net trade and moderate growth in business investment, offsetting more subdued growth in household spending.